All right, so you are welcome to today's class. So tonight we're going to be talking properly or looking deeply into the charts. We're going to be doing some kind of chart analysis. I mean, chart build-ups, what all these charts represent and how you can study them. And I asked that, I asked us to ask our questions. If you have any question, please feel free to ask question before we go proper into today's class. So I have a question from Maximus. So I understand the first concept of traffic, but I do not know how to actually trade. Traffic, I don't really get. What do you mean traffic? Like place a trade yet. Okay, don't know how to place a trade. Placing a trade is quite very, very easy. All right. And then I will implore you to please rewatch the video of the Monday class is already on YouTube. Okay. So, but I'm just quickly I'm gonna just show you quickly how you can open a trade and all that. So this is the price charts that I have here. And this is when you install your MetaTrader 4, this how your chart is gonna look like, most likely this colored, before you now do the formatting that you know were taught. So, but please, if you can see my screen, let me know. Let me know if you can see my screen. I'm sharing the MetaTrader 4 now. So to place a trade, this is where you go to new order. All right, you just go to new order here, new order. You look at the instrument you want to trade, Euro USD. It's what I have here. Okay, if it's not Euro USD you want to trade, you choose. Okay, but I always advise that make sure that the instrument you want to trade is the one that you have here. If you don't want to trade the Euro USD, let's say it's GBP USD you want to trade, just come here, type GBP USD, GBP USD. And then once you see it, you can drag it here, or you can drag like this and drop, or you can right click and click chart window. It's going to open a fresh GBP USD chart for you. But if you drag it into this one, it's going to replace the one you have here. That's the difference between dragging and the other one. If you drag this chart, this one, on this Euro USD, is going to replace this one. This one is going to go off. But if you want to open this GBP USD chart separately in a new tab, you just need to right click and click chart window, and then it's going to open it right here. All right, let me remove all these things. Okay, so that's just, let's just say it's Euro USD you want to trade. So all you need to do is to just click on new order. When you click on new order, choose the volume. That's the lot size you want to use. But I already told us how we can calculate the lot size, right? I told us that, right? I'm going to answer other questions that we are posting. So you just choose the volume. Okay. Now, for those of you who are not, just choose the volume. There are two ways you can calculate the volume of your trade. Now, it depends on how aggressive or conservative you want to be. But I always advise that if you, as a starter like this, you don't need to go aggressive. Okay, you can go quite a bit conservative or moderate. So what's the general formula I used to give is whatever your money is, let's say your money is $200, divided by 20,000. Okay, and then that's the lot size I usually advise people to use. Okay, so let's say your money is 200 divided by 20,000. So that's like 0.01. So that means if your money is $200 or less, I don't advise you to use more than 0.01. So as your account now gets bigger and you are getting more confident, you can increase it 0.02. Now, if you trade 0.01, the profit and all that is going to be, small, maybe $5, $7, $10, $3, and all that profit. And the losses may be also around that range. So, but the more you are able to build your $200, the more you can increase the lot size as time goes on. And I also used to advise that, just focus on 0.01 lot, okay, on whatever currency pair you want to trade, and also focusing on a particular time frame. I'm gonna talk about time frame very soon. when you are doing your analysis. All right. So it's just 0.0. Another way to do that is to risk a fixed amount instead of you to just use 0.01 on all, because if you use 0.01 lot for all of your trade, all right, the risk and the profits therein is going to vary. All right, it's going to definitely vary. But if you want to trade based on a fixed risk in the sense that I want to only risk $5 on all of my trades, I want to only risk $10 on all of my trades, and so on. What you need to do is to use a lot size calculator, a position size calculator. That's what you need to use. All right, and there are lots of free calculators out there that you can use to position your trade, so that you know that, okay, if this thing goes wrong, this is what I'm risking on this trade. And if it goes right, your profit is also going to be based on what you are risking. So let me take you through a calculator that I like using. So let me share my screen with us. So this is my browser now, and I'm going to, this is the position. You can see I even kind of bookmarked it here. So I just clicked on it. So I'm going to send you guys the link so you can also copy and save. And also I have applications app on my phone, position size calculator app on my phone. So when next week, we're going to look at the MT4 mobile version. So when we talked about the MP4 mobile version, we're also going to show us how we can download and use mobile Forex calculator, position size calculator. All right. So I'm going to send us the link now, the link to the calculator. So I've sent the link to this calculator that I'm using. All right. Remember that the link is only for the web browser. All right. So the first thing you are going to see is the currency pair you want to trade. So you can click and then type. If it's not easily here, just type it. Let's say it's EURAUD, for example, it's a currency pair. You type it, you choose it, and then your account is in which currency? Is in dollar. So your account is domiciled in dollar. And then you can put your account size there. How much is your money? Your balance, all right? Your capital. Let's say it is $250, for example. And then I ask you, what is the percentage of your account you want to risk? If it is 1%, you put it there. If it is 2%, you put it there. If it's 3%, you put it there. And if you don't find the percentage convenient, you just want to use money. Like I want to risk just $5, $2, $10. So you just click swap with money. When you click swap with money, you see that it's going to be money in USD. So let's say it's $10 you want to risk on that trade, just put $10. And it will now ask you the stop loss on that trade. So Lucky talked about stop loss and take profit. All right. So you put your stop loss here. We've not done analysis yet. We're just trying to teach ourselves how to place trades. When we do analysis, it is analysis that will determine what stop loss or take profit or currency instruments or instruments that you are going to trade. All right. So when we get there, we're going to explain all those areas. We're even going to spend more time on that than all this. So these are the basics, the foundations that we need to deal with properly. So let's say the stop loss on that trade is 30 pips, for example. 30 pips. So I'm risking $10 on a Euro Australian dollar trade. And stop loss is 30 pips. So what lot size am I going to use? That's the essence of this calculator, to help you with lot size to use for that trade, so that you will not risk more than $10. Okay, if the trade goes against you, for example. So I just click on calculate, and then you can see what I have at 0.05 lots. All right. So I'm going to just pick this 0.05 lots and then go to my MetaTrader 4. All right. And then this is the trade. Okay, Euro Australian dollar. We switch to Euro Australian dollar. Okay, let me look for Euro Australian dollar. So this is Euro Australian dollar. All right. So I just click on new order on Euro Australian. You can see Euro Australian dollar here. And I just put the volume there, 0.05. And then I put my, what kind of order do I want to sell or I want to buy? I just put all those, my trading parameters there. Okay. So the essence of the calculator is to help you calculate the trading volume, okay, that will measure what kind of risk you are going to take on that trade. So that's why I used to tell people that, you know, you don't necessarily have to lose your money, okay? When you get proper education, it will be very hard. Even if you are not doing fine, for example, it will be very hard to lose your money when you get proper education, okay? And when you understand the basics very well. Now, when you now add the good understanding of the basics to a proper education and a proper strategy, you discover that you're going to make money, okay, in the market. Okay, so because every trade you are taking, you're not risking more than $10. All right. For some people, they don't want to risk more than $5. So instead of you to panic, you don't want to lose, you don't want to trade and all that. It's just what you can do is just to find a small amount of money. Okay, this I want to risk just $5. I want to risk just $3 per every trade that I take. And then you just go to the calculator to determine the lot size you should use for that so that you won't risk more than the money you are risking. All right. So in this business, there are two things. We are taking risk to make money. All right. So we are taking risk in order to make money. Remember when I was explaining the concept of margin and leverage, when I gave you guys the example of let's say somebody has, two people have business opportunities, investment opportunities that they know that it's going to give them money. So somebody decides not to use leverage while the other person decides to use leverage. I don't know if you still understand that. Now, let's say the bank now borrows him a certain amount of money and then keeps the rest. The money they are keeping is the risk the person is taking. The person that wants to borrow them, that's the risk is taking. So in this business here, we are using our risk to make money for ourselves. Okay. There is nothing like, I don't want to risk anything. It's not possible. So you have to risk. That's why we try to calculate that risk. We try to take calculated risks that we know that we can bear. And our reward is also going to be proportional directly to our risk. So if I'm risking $5, for example, on a trade, I can decide to take $10 on that trade. I can decide to take $15 on that trade. I can decide to take $20 on that trade. But somebody that is risking $500, for example, the person will not be targeting $10, $5. You'll be targeting $1,000. All right. You'll be targeting 10,000, $2,000, 1,500 and all that. So the higher the risk we are trying to put on the trade, the higher the profit potential as well. Okay. But one thing that we should never talk about is not taking risk. We have to calculate it. And that's why we have this calculator, okay, that helps us to measure the risk we are taking and then prepare ourselves for the journey. All right. So that when you take the risk, you know that if the worst comes to worst, this is what I'm risking on this trade. So you'll be able to sleep. Right. So that's the essence of measuring the risk properly. Okay. So having said that, now I think I've answered that question, right? So that is how you place trades. That's how you also calculate how much you are risking on a trade. So I have another question from Omodayo should have said, how do we get signals if it's gonna be profitable for us or not or loss? Then when we get to the analysis aspect, we're gonna take care of that. Okay. What we're just looking at now is the basics, which is very important. And I have a question from Omodayo again. Is it the same thing like this on mobile phone? Yeah, it's the same, but it's not exactly the same because the mobile phone is a mobile application, while this one is a window application. So they're not going to be exactly the same, but they have the same features. Okay, like this one, the laptop I'm using is 15 inches, so one cannot expect that the way the chart looks on the 15 minutes on the 15 inches is the way it's going to look on the 7 inches phone. So there's going to be some kind of a little bit of difference in the way these tools are arranged or are being used. But trust me, all the tools that you find there can also be accessed on the mobile version. All right. Okay, so I think that's all for all the questions. So let's now move in proper into what we have for today. And so today, I hope I'm still on the chart window. Okay, I'm still here on the MetaTrader 4. So what we want to look at today, we want to look at these charts. Okay, I've not really talked about this chart properly, so I want to look at what they are. Okay, so the last time our teacher explained to us how we can customize our charts. Like there are different on the MetaTrader 4, you have 3 default charts, chart what now properties. That's okay, color scheme. There are 3 default color scheme. So to get that, you just right click on the anywhere on here, anywhere on the chart window, and then you click on properties, and then you go to color scheme and choose. The one I'm on now is a dark background and a green chart, green candles. You can say green on black background. I can have black on. This is how black on white is going to look like. Okay, this is how yellow on black is going to look like. So before you click OK, you will have seen how it's going to look like here. Okay, so if you are somebody who likes dark background, of course you can go with green on black. If you are somebody who likes light, you can go with black on white. So let's say we are going with green and on black. Okay, let's just say we are going with that. So I'm going to click OK, and this is what we have. And then there are some stuff here that I like removing, like this grid. But if you are okay with it, no problem. And but me, I like removing the grid. So I right click and go to properties, and then I'll go to common, and then you can see show grid is ticked. So, and you can see all those grid here. I want to remove it. Now the other one, the thicker ones, are what we call period separator. Okay, if you don't need it, you can remove it. Okay, but there are some strategies that are based on period separator. So period separator is the one that shows you where a day is starting, where a trading day is starting, or where a trading week is starting and where it's ending, or where a trading hour is starting and where it's ending, depending on the time frame you find yourself. But I think for now we should just remove it. When we get into the area of analysis, when we need it, we can bring it back. So I'm going to uncheck it now and then click on OK. As you can see, I now have a very clean chart, and it looks actually much better now, right? Okay, so the next thing we want to do now is, if you are okay with this candles formation. Okay, but before let me remove these things here. When we need them, we can bring them back. So I'll just right click on date and click delete indicator. They are called indicators. So you can say I have a clean chart now. Okay, by the way, this is what we call a chart window. And a chart window is, of course, a chart or a graph or a graphical representation of the price of an instrument plotted against time. There's a popular saying that time is money, right? So as time is moving, prices are changing, all right? And then you can see the price changes on these charts, on each of these candles. Okay, prices, you can see the time here, and then you can see the price here. So those are the 2 axes, okay, of this chart. They are dealing with 2 things here, price and time, all right, represented with these graphs, with these charts. Okay, so that's what it looks like. Now, what does each of these candle now mean? Each of these candle shows what the price is doing or what the price has done. So the current candle that is moving is this one, and you can see this line here. This line here is the current price, okay, of this particular instrument, Euro US dollar. Is the current price of the Euro US dollar, which is 1.03202. Okay, it's changing, all right, at this particular moment in time. All right. And this is the current candle that we have. All about all these candles. These candles are the previous candles that have been formed. Okay. So chart is, I mean, is both historical, shows both the historical activities of the market and the current activity of the market. This is the current activity, the current count. These are the previous ones. Okay. As you can see, we have even up to 28th May, and we can even have up to, this is January, October last year. I can click and drag and see what price has done, for even up to a year or 2 years and all that. Okay, so having said that, the next thing we need to talk about now is the different types of charts. We have three different types of charts. We have the bar charts, we have the candlesticks, and we have the line chart, as I'm showing us here. Okay, the bar chart, the candlesticks, and the line chart. In case you don't have your own, just go to view and make sure, and go to toolbars and make sure this is checked, chart is checked. If you uncheck it or mistakenly lose it, that means it's unchecked, you won't find it here. All right, so this is the panel that controls the chart. This chart toolbar is the panel that controls what happens on the chart. All right, if it is unchecked, so that means you won't find it here and you'll not be able to control your chart, do unnecessary things on your chart. All right, so looking at the let's start with this one, which is the line chart. Now the line chart is, because we said this chart has to do with price. There are 4 major things, okay, when a price is about to open within a particular time. We say it's about price and time. The first thing is the opening price. I'm going to call it OP. Okay, there is the opening price. Maybe I should just put it here. That's the opening price. And there's the what? The closing price. When the price is just about starting, within a particular time, there's going to be a price that it's opened with. Okay, the price, at which it opened at first. And then when that time is done, they're gonna have the last price before we move to the next time, is what we call the closing price. Okay, meanwhile, let's say price starts let's say in a particular 1 hour. Okay, let's say price starts here, and then it's now going up, and then goes down, and then goes up, and then goes down, and then goes here, and then closes here. Let's say it closes here. All right, because it's kind of moving up and down, up and down, up and down like that. Let's say it closes here. Now this is going to be our opening price. This is going to be our closing price. All right, guys, we had the network glitch there, so we are back. Sorry, please. We're just going to continue from where we stopped. Okay, let me start recording again. Let me take us back to where we stopped. Sorry about that. Network issues. Meanwhile, can we all hear me now? I hope we cannot hear me. Okay, so all right, so that's it. So you have, if let's say price starts here and goes up and goes down and goes like this before it closes here. Now we have 4 major prices that we look at. We have the opening price, we have the closing price, we have the highest price, and we have the lowest price within a particular time frame. Okay, so those are the 4 prices that we have. You have the open, you have the close, you have the high, and then you have the low. Okay, but one thing about the line chart is that the line chart only shows 2 prices, which is the open and the close. Okay, it open here, it close here, this one open there, this one close here. So which is not really enough. Nobody actually uses the line chart these days. Okay, a lot of people like using the candlestick. And then the advantage the candlestick, as I've clicked this where I got the candlestick. This one, I clicked it and I got it. So, and the advantage here, all right, is that it can give us those four prices: the opening, the closing, and the high and the low. And it can also represent these four prices in a pictorial form like this. In a pictorial form like this. Okay. So in a pictorial form like this, that's how it represents them. It looks much better than the line chart. So that's why most of traders like using the candlestick. So we're going to just focus on the candlestick for the rest of the class, okay, throughout the trainings and all that. All right. So having said that, now each candlestick represents what price is doing or has done within a particular time frame. Now, talking about time frame, on MetaTrader 4, these are different time frames that we have. 9 of them. You have the 1 minute time frame. You have the M5, which is the 5 minutes. If you put your cursor on it, it's going to give you the full name. And then this one, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, 1 month. All right. So the one I have here now is 1 day, which means that this is the current activity of the Euro US dollar today. This is the chart that shows what the Euro US dollar has done or is doing today. This one here is what it did yesterday. This one is what it did on Monday. All right. And this one was on Sunday when the market just opened. And then this one was last week, Friday. So you won't see anything for Saturday there because on Saturday, the market is completely closed. And then I might also, if I click on 1 hour, you would see that this is what the market is currently doing in the current hour. So we are just 39 minutes into this current hour. This is the past hour. All right. This is the hour before. So this one is showing hourly representation. So which means that if you are looking at a 1 day candle, this particular candle, you will discover that, at the end of a 1 day candle, in a 1 day candle, of course, you're going to get like 24 1 hour candles, right? 24 1 hour candles. That's what it is. What if I even now go to 1 minute? Definitely, you're going to see so many candles for a day. So today so far, we've had, let's look at where today started. Today is 10th, right? You can see these are all the daily candles. From the 1 minute, 10th. Okay, just around here. Okay, so that's where, now let me use a bright. Okay, just around here, because it was where today started. On the 1 minute candle, and then look at how many candles we have for today so far. If you go to the 5 minute, you see that the number of candles for the 5 minutes is going to reduce because these are 5 minute candles. All right, from here to here. This is what we have had so far today. The USD has really moved up massively. And then on the 15-minute candle, we have this. All right. It has reduced as well. Let's jump to the 1 hour. This is what we have on the 1 hour candle. And so far, we've had how many hours? If you count, you'll see that we've had a good number of hours so far today. So on the 4 hour candle, this is what you have. 1, 2, 3, 1, 2, 1, 2, 3, 4. All right. So we are on the, is it 4 or 5? We are like on the, because we're supposed to have 6 4-hour candle for the day. All right. So at the end of this one, we're going to have one more. And then before we move to the next day. But on the daily, it is just one candle, which is this. All right. Yeah, which is that. If we now go to the 1 week, you will see that 1 week is going to include this candle for Wednesday, this candle for Thursday, for Tuesday, this candle for Monday, and even this one for Sunday, because we just like the first 1-2 hours of Sunday. That's when the market open for the new week. So it's going to see that the weekly candle is going to cover all of that. All right. Let me change this one to maybe gray. Let me use another color. Lavender. All right, this is good. So it's going to just, if you go to the 1 week, this isn't good too. Let me try yellow. Okay, yellow is fine. So if you go to the 1 week candle, you'll see that 1 week candle is going to, can you see just one? All those 3, 4 candles you've seen so far on the daily time frame, for the weekly time frame is just one. All right. So it depends on which candle you are using. So this is what we call time frame. And when you go to the monthly, of course, that one is going to show the candle for this month so far. Okay, this month so far. So that's the way the market is being charted. Okay, so that everyone will be able to analyze it. So somebody who wants to see the bigger picture of the market can go to the higher time frame. Somebody who wants to see the nearest picture, okay, the nearest activity, the closest activities of the market, we go to the smaller time frame to do all those analysis. All right. So somebody who want to be trading, who want to be an intraday trader, okay, short-term trader, we look at the lower time frames. While somebody who want to be a medium-term trader, we look like at maybe 4-hour daily. And then somebody that want to trade for the long term, that want to hold trades for many weeks or few months, we look at the weekly and the monthly. We're going to look at different types of traders later. All right. So that is what the candlestick represent. Now let's now look at each of the candlestick one after the other. Now, when you have a candle, you are going to have a body. The body is this. This is the body. Each of them has a body. The body can either be colored black or white, okay, which is the way this chart is being represented. Okay, so the body can either be colored white or black. This one is colored black. This one is colored white. So the colored part is the body. All right. So apart from the body, you also have the upper wick and the lower wick. All right. You're going to have the upper wick and the lower wick. And then earlier, I told us earlier that we have 4 different prices. You have the opening price, the closing price, the highest price, and the lowest. So that's what each of these show. This is the highest price. This is the lowest price. And one of these is the open and the closing. So the highest and the lowest are very easy to know. This is the highest price of this candle today so far. This is the lowest. Yesterday, this was the highest. This was the lowest. The day before, highest, lowest. Last week, Friday, the highest was really very close to this place. And then this is the lowest, highest, lower, very tiny wick there, highest, and the lowest. So highest and lowest, it's very easy to identify the highest and the lowest points of within a particular time frame on the candle. So what we need to know now is, what information does the body give to us? The body is actually more significant because it gives us more information. The first information it gives us is that it shows us the direction of the price, the overwhelming direction. Okay, the winners, with the winners within that particular time frame. Is it the buyers that won or the sellers? If the buyers won, what will happen to price? Price is going to go up, right? So that means if the market opened here at this price, if the buyers are the one that won, what happened? Price is going to go higher and close here. So that means for that particular time, the buyers are the one that won. Okay. So in that case, you're going to, of course, have the body like this. This is the closing and this is the opening in that way. All right. So this is the opening price and this is the closing price. Okay. Now it's the buyers that won. Now, how do we know? Because each of these represent the higher. This one could be the open, this one could be the close, or this one could be the close, and this one could be the open. How do we know which one is which? How do we know that? We know that by the color of the candle. Okay, this one, if the color is black, it means that price closed up. So that means the buyers were in control. So that means the price was bullish within that particular time frame. That means price went up. That means price opened lower and closed higher. Okay, if the price closes higher than it opens, what is that? It means it went up. It means it was bullish. Okay, such a body will represent such a body with a bullish body. For this particular chart, the bullish body is black. But if the price opened higher, and closes lower. So that means the price closes lower than it opened. So that means the sellers were in control. So that means that was a bearish candle. Okay, and the bearish candle is represented with a white body. Okay, so that means when I see a black body candle like this, that means this is going to be the open and this is going to be around the close. Although this candle has not ended there, we don't know where the close is going to be. All right. For this particular candle, it is black, the black body. So that means within that particular day, yesterday, price was bullish. So that means this was the closing price and this was the opening price. For this particular candle, price was also bullish. So that means this was the opening price and this was the closing price. All right. For this particular day, however, the price was what? Bearish, because you can see that from the color of the candle. So I can now say this is the opening price. The opening price is going to be higher than the closing price in this case. Okay. Now this is another bearish body candle. That means we have the opening price here and the closing price here. So anytime you see a white bodied candle like this or a bearish candle like this, you know that the sellers were in control. That means price closed below its opening price. If I see a bullish candle like this, okay, I know that the buyers are in control, which means the price closed above the opening price. All right. Does that illustration, does this example make sense to us? Okay. Does it make sense? If it makes sense to you, please type yes. So once you see your candle, you'll be able to know what the highest, the closing, the open and the lows are. All right. If it makes sense to you, if you get it, please let me know. Drop yes if you understand what I just talked about. So we can then look at each candle, individually and then label it. All right. Maybe we can just label that. For those of you who have not really gotten it properly, when we label, let's say like 5 or 10 of them, now you will understand. So let's start from here together. Make sure you follow me very well. So we have this particular candle. This is the highest price. Okay, we can look at the open and the close first. This is a bearish candle. So that means price open higher and close lower. So this is the open price. This is the closing price. And this is the highest price. And this is the lowest price, right? And also here, this is also a bearish candle. Okay, which means that what? Which means that price opened here and closed here. So price closed lower than it opened. That means it fell. And this is the highest at price and this is the lowest price. Here, this is the open, this is the close, and you're going to see that the lowest is very, very close to the closing price, right? That's why we have that very tiny wick, W-I-C-K. I already told us what wick. You can call it wick or you can call it shadow. So that's the candle wick, just like you have for your candles, right? You're going to have like a thread on top. Okay, so you can call it a wick or you can call it a shadow. So we have the upper shadow and lower shadow. Shadows are in different sizes, depending on the distance between the opening price and the highest price, or the closing price and the highest price, or the opening price, depending on what color of the candle that we have. So in this case, you can see that the lower wick is very, very tiny, which means that the closing price and the lowest price they are very, very close. So that means price almost closed at the lowest price for that particular day. And then this particular day, the opening price was very, very close to the highest price. All right. Was very, very close. I mean, the opening price, yes, was very, very close to the highest price. This is the highest price. This is the opening price. And this is the closing price. Why this is the lowest price. In this case, you also have a very tiny upper wick, which means that the opening price was, when price opened here, it didn't really journey too far before it just continued to fail. That was a very, very bearish market. Okay, it was just the sellers were just in control all through until they push it down here. So a candle like that looks like this. A candle like this, like that, look, let's say it's starting here. Let's say starting here, all right? And after starting it just goes up a bit. to make this high, and then started coming down, come down, come down, come down, and then makes the lowest point here, and then goes up to close here. That's just the way it is. If you want to just use some lines for it, it opens there. It just went a little bit high and drops to the lowest price, and then closed here. All right, closed here. So just closed here. But a candle like this, for example, is what is a bullish candle. This is the highest price. This is the lowest price, and this is the closing price. While this is the opening price. All right. So in this case, the closing price is higher than the opening price, which makes it bullish. Although you can't actually say that, of course, the buyers were in control all through, but you can't actually say that they were in control all through. But overall, they were still able to, they were still able to manage a win, okay, overall. But at every point, at different period within that day, you saw the sellers also were in control at some point. So if you want to represent this now, you can say that, okay, price opened here. All right. It now went down. That means at some point, the sellers were in control. It went down like this to give us this lowest price. That's what it means. It opened here, then it went down to give us this lowest price. And then suddenly the buyers just took over and push it above the opening price, take it high to make this high point here. But at the end, the sellers push it back. You can see that there was a kind of battle. Okay. Yes, at the end, this is the closing price and this is the opening price. You'll see that at the end, yes, there is still a very tiny net profit or net dominance, okay, by the buyers, which is what gives us this body here. But overall, when you look at everything in a bigger scale, you discover that, yes, at some point, it's not that the sellers or the buyers overwhelm the sellers at every point within that particular day. Okay. At some point, you can see the sellers were in control for the buyers pushed up. But even at the end of the day, the sellers still try to fight back. All right. And so the next day, what happened? The next day, what happened? Price opened there and closed here and give us low here. So the next day, being the fact that the sellers were in control, they still open here and they even still push lower. So that means the sellers of yesterday, they continued the day after, all right, to push to this lowest point here for that day. But the buyers came back again and then push it even much more stronger than they did yesterday. And then the sellers close it back again. But overall, okay, they push it higher and then they close it a little bit lower. But overall, the buyers still stayed in control. And you will see that for this particular day, the buyers they actually did much better. They were in more control than this one. When you look at the size of the body shows you both the traders that were in control and how much control they had. Yes, this day the buyers were in control. This day the buyers were in control. But for this particular day, the buyers were in much more control. And you can see that by the size of the body of this candle. Okay, you can say the same thing or the inverse of that for these bearish candles, the 3 bearish candles, the 4 bearish candles that we had here. Yes, the sellers were in control for most of the day here, but that doesn't mean that the buyers didn't push a bit. That was, in fact, they were the one that started the move by pushing higher here before the sellers push it down, okay, to this place. All right. So in this case, the sellers were overwhelming winners. The following day, they even overwhelmed the sellers. More, and then this day they overwhelmed the sellers too, but not as much as what we had in the previous day. And then this one, the sellers even did more, okay, than the buyer before. We now started seeing some kind of struggle, but the buyers were still in some control. That's just how the chart looks like. So every chart shows you, every candle shows you the activities of the buyers and the sellers. So it's a kind of battle between the buying volume and the selling volume, the way they balance, the way they strike each other out, the way they fight things out. Okay, so that's why you now have, because of that, you now have different shapes of candles different shades of candles, which can also be very, very important. We're going to look at different candlestick patterns later when we get to the higher classes. All right. So by now, I believe that every one of us should be able to understand how to read the candles. All right. And one thing you're also going to notice here is that I also need to point it out that you will discover that when the price open, wherever the previous chart closes is where the next chart is going to open. So that means the closing price of the previous chart is going to be the opening price of the next chart, right? Like this particular candle, this is where, okay, let's start from here. This candle, they bring it, and this is where it closed. Open, close, and then immediately this is the open. You can see it opened where this one closed, and then drag it down. So that's the way they usually move. But there are sometimes it doesn't happen like this exactly. That sometimes you see some kind of lapses between the closing price of one candle and the opening price of the immediate candle. When that happens, we say we have a gap. Okay, let's now now that we have defined how the charts should be and what gaps mean. So we're now going to look at different candles, and we're going to see those of them who are gapped at one point or the other. All right. So with what we are doing here, we want to be able to analyze the candles, at least understand what they are saying. So let's look at this candle. Let's start from here. Now for this candle, this is I'm going to use this horizontal line to mark the closing price. For this candle, this is the opening price, closing price. The closing price, it opened a closed here, and this one exactly started where it closed. All right. Before, so that means there was no gap here. Opening price, closing price is equal to opening price of the next candle. Okay, but this candle now closed here. When it closed, this one also opened there. So no gap. This candle then closed here. And then you would see that there was a little bit of gap here, very tiny, right? Because this one didn't exactly open where this one ended. So just a little bit of gap there. And here, no gap at all, all right? This one also closed here. And then this one opened here, no gap, right? And then this bullish candle closed here. That was where this one opened, no gap. And this one closed here. That was where this one opened, no gap. But what happened here? This one closed here, but this one opened above. There is a really big gap here. Okay, there was a gap here. This is how big the gap is. See the gap? This one closed, this one opened here. Okay. No, that's wrong actually. Okay, this is the closing price. Let me do that again. So this is the closing price for this one, and this is the opening price, right? Okay, I didn't adjust this one. Then this one moved up and closed here. Okay, no gap. Pardon me. So this one closed here, and this one now opened here. So no gap. And then this one closed here, right? And this one opened a tiny little bit of gap, maybe no gap even. And then this one closed here, and that's where this one opened. So you understand what I'm trying to say, all right? So when the closing price of the previous candle is not the opening price of the next candle, that means there is a gap. Let me look for a typical example of a gap, all right? So that when you see it on your chart, you know that, okay, this is a gap. And in the course of the training, we're going to tell us the significance of this gap, okay? Although before we go there, I'm going to tell you why we can see gaps on our charts. Okay. I don't seem to get a very good example here. Okay, I think that was a gap here. It just is very tiny. So this is where this one closed. This particular white candle, and this is where this one opened. Yeah, you can see there's a little tiny gap there. Okay, so what causes gap? We can see gap during high volatile moments when there is a high volatile market news comes. And so because the market is so excited, okay, the volume is so big, the volatility is so big, you will discover that the next candle might just jump, okay, might just create a kind of gap. That's one reason why we see gap. Okay, but the one that is most common is the over the weekend gap. So let's say the market closed on Friday, and then when it opened on Sunday, it might not open exactly where it closed on Friday. So we usually see weekend gap, especially even when we have a big something to do during the weekend. Maybe that was something that happened during the weekend, maybe some event, market event. We're going to talk about some of these market events later. We might actually see some gap because something has happened. And so when market now open on Sunday, you're going to see that the opening price is going to be far from the closing price on Friday. So if you want to appreciate more how the charts, how the candles move, just go to the 1 minute time frame and watch it for like maybe 1 hour or 30 minutes, because when you go to the 1 minute time frame, you can see this. So we're going to take the next 2-3 minutes to see how this works. So you can see that the candle opened here. It has given us the lowest of the point. So it's still showing us white because the closing price or the current closing price is below the opening price. Immediately it goes above here, it's going to turn black. You can see that. So why? Because the opening price is now above the closing price. So it's coming back again. So you can see the body is between the opening price and the closing price. Okay, the candle is not closed. So that's what you see. So it has created the highest point now so far. This is the lowest point so far. Okay, so you appreciate the formation of the candles better when you just go to the 1 minute time frame and then see maybe the next 15 candles. You can see this one has closed it. Now look at this one, does not have a body. Why? It does not have a body because the price closed where it opened, right? Because the price closed where it opened. Look at another candle like this. It does not have a body too because the price closed where it opened. In this case, the closing price is the same thing as the what? As the lowest price, and it's the same thing as the opening price as well. That's why you just have this candle, this one here, and then you just have this 1 week. Okay, price opened here, it closed here, it formed the lowest point here. All right. So unlike this kind of very big candle here, price opened here and closed here very big. Meanwhile, let me leave this to you. You can watch as go to your 1 minute time frame and check as many as you want. Okay. Meanwhile, if you don't, now I've been seeing white and black candle. When you check some people's chart, you might not exactly see white and black candle, like you might see a different color. Okay. So that's why I didn't really I also mentioned bullish and bearish candle. Okay, you can decide how you want your bullish candle to look and how you want your bearish candle to look. So the chart settings that we have here is giving us a black bullish candle and a white bearish candle. So if you want to change that, you just right click and go to properties and go to color. You have the color here. Then go to where you have bull and bear candle. You can see the bull candle is black, the bear candle is white. Some people like their bull candle to be, let's say you want your bull candle to be, let's say you want it to be green, if it will make sense. Let's say you want it to be green, okay, and you want your bear candle to be black, or it can't be black because you have a black background. It's not, don't show anything. Okay, it can be black actually. Okay, let's make it red. You can see. So that's it. And look at how it looks. So in this case now, the bull candle is what? Is green, while the bear candle is what? Red. So it's not fixed. It all depends on how you want your home to look like. All right. How you want your own to look. Just all depends on you. Okay. So having understood, I believe all of us have understood, or if you have understood I mean, if you know that when you check your chart, you understand what the charts are saying. Okay, please type yes if you understand everything that I've said so far. If you appreciate it, you really believe that you can deal with it, please type yes. Let me know how many of you can deal with that. Meanwhile, you have to just practice. Maybe you just spend like some hour, maybe 1 hour, go to the 1 minute time frame, and then because the 1 minute time frame is going to give you more activities. So 1 hour, you will have seen 60 candles formed. You have learned a lot. You can't go to 1 day because 60 candle on 1 day means 60 days. Okay. So just go to the 1 minute and then can see as many as you want there. All right. Okay, so thank you very much, guys. So the next thing we're going to do now is Lucky has taken us through how we can customize our charts. You can actually customize your chart the way you want it to look like. So you can just go to right click, click on properties and come here. So background, you can change your background. The background I have here is dark. You can change it to whatever color you want, okay? And the foreground is white. Okay, meanwhile, when you want to set when you want to do this kind of setting, make sure that one of them is a dark color and one of them is a light color. Okay, because if you put dark foreground on a dark background, you won't see anything here. You won't see the price because the price is the foreground, okay, while the chart window itself, this is the background. So go to properties again, and let me choose, let's say, gray or something, or snow or something. Snow is a light color, so you can see I have this. So just make sure one is dark, one is light. All right. So the next thing I'm going to do is the grid. Of course, I've removed grid. All right. I just click none. It's not going to show any grid. Okay. And then bar hop. For this one, you can make it black, black, or make it non. Okay. Make it black, 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 and black. Okay, I can't make it black, black because I have a black background. Okay, so this bar up and bar down is the week. The week. So if I make them black, 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 you can see I won't see any of the weeks. Why? Because I have a black background. All right. So if I want to make them white, or let's say a light color like this, because my background is, you can see how it looks like. Or you can make it green or red, any other color that can show there. All right. If I make it red, and red. All right, it just depends on what you want, but just save yourself all the stuff. Just go to right click, click on properties, and start by choosing one of these. Okay, start by choosing one of these. You want black and white, you can choose black and white and click OK. You know, this in this case now, bearish candle are black, while bullish candles are white. All right, you can then go to properties and then change your bear candle. So I don't think once you choose a color scheme here, I don't think you should change the bar up and the bar down. You can just change the body of the candle, what color you want it to be. So bear candle, if you don't want black, you can choose red. Some people believe that red means red or crimson or whatever. It means something that is going down. While bull is you know, maybe something that is going up, or maybe green, something that's going up. Whatever you want. So at least whatever you're doing, you're going to see it here. If you want it, you click OK. Okay, this looks nice, right? Okay, somebody's asking, why is it that some candles small, why some candles? I think I've answered that. So the candles that are big, okay, those candles that are, the sizes of the candle shows the momentum of the market that time, how volatile the market was. So let's say during that time, the market moved much within that particular time frame. Okay, when the market move much within that particular time frame, the candle is going to be big. But when the market did not really move, when it barely moved within a particular time, the candle is going to be small. So the size of the candle is showing us the momentum of the market or the volatility of the market within, from time to time. So because from time to time, the market is going to move the same way. All right. Even if it is daily, it's not going to move the same way every day. Today, now the market has been, Euro-US dollar market has been very volatile. All right. The kind of move it made today is even bigger than when you combine all the moves that we have had in the last 4 days. All right, it's bigger than that, like the last 4 days. Okay, and that was as a result of some big market event that was released today. Okay, so that's why we have different sizes of candle. All right, that's why we have different sizes of candle. I hope that makes sense to you. If it does, please let me know. If that was well answered, let me know. Okay, so once you are done with this, if this is what you want, you can save it, because one thing is, when you start dragging your chart, okay, when you start dragging your chart, let's say you've chosen this is what I was using before. If I open another chart, let's say Euro card chart window, this one is still going, still this one is going to show me. So that means I will now have to start editing it again. I will now start to edit it again. So I don't need to do that. What I need to do is just go to Euro US dollar and save it as a default. Properties. Sorry, I just right click and then go to templates and save this template. If I save this template, I can call it default. Just write default there. If you write default there, so it means that anytime you open another one, it's still going to be, you don't have to edit it again. You don't have to edit that one. So let's check CHF Japanese yen and let's go to chart window. You can see. All right. So I don't need to start changing this one again and all that. So anything that I bring here now, Euro GBP is going to be just this. All right. So that's how you can customize the look of your chart and save it as default so that every other one that you bring, you don't need to start editing it again. All right. You just have this and that's it. All right. So that is it about our charts. So with this explanation, I believe that all of us will be able to navigate through our charts from one different time frame to the other. And I also think that Lucky also mentioned to us these two tools here. So these are the shift tools. Okay, for example, if you want some kind of space between this line and the current candle, make sure that this thing is checked. If it's not checked, let me uncheck it. You can see it moves it very close to this margin line here. All right. If you don't want that, if you don't want it to move too close, just do this. All right. And then it's going to give you some space. All right. That's one. That's the shift end. And this other one is the scroll the chart. Now, when you are scrolling your chart, if this thing is checked, if this one is checked, what it means is that when you are scrolling your chart, each time there is a new price, it's going to just, the chart will just immediately move back to this place. Because sometimes you want to scroll your chart to see what happened within a particular time, but you'll find it difficult. You can see the way it's dragging me back. It will drag me back. Once there's a new price, it's going to drag me back. Unless when the market is sleeping, when the market is closed, it's not open. That's when I'll be able to drag because there are no new prices loading. Okay, to avoid this, just make sure you uncheck this. Because it says scroll. Okay, it says it's not bringing him now. I think it says, okay, scroll the chart to the end on tick incoming. Okay, what you are saying is that if you check this place, when there is a new tick, the price is going to immediately come here to the current candle. If I don't want it, even if there's a new tick, it won't drag me back. I can just drag and drag to wherever I want. Okay, and now when I want to return it, instead of me to drag it back here, I can just click this one twice. Okay, I'll just click it once. All right, you drag it and then click it, and then I get this, and then I can click it again to shift it to the left. Okay, so practice that as well. It's a very easy thing. Remember, you have to practice this thing before you can say that you understand. It's not that you've gone through the class and you just leave it like that. Just like every other thing, if you learn something and you don't practice and practice, or at least practice to the level that you are now so used to it. Okay, if you don't do that, it's definitely going to leave you. You believe that, right? So that's it about charting, candles, and all of those things. And this is now going to be the beginning of market analysis for us. All right, so now that we have understood all this, that means that we can now start talking about market analysis. All right, I hope this makes sense to us. So this is where we're going to end for tonight. We're going to start a new class next week, a new module, which is going to be just about analysis. So you don't want to miss next week's class. So next we're going to start, we're going to have an introduction to technical analysis. All right. Okay, before I go, before we end today's class, let's just quickly do something let's look at the types of traders, or the types, or let's say types of traders. So we have different types of traders. Now that we have gone through all the candlestick and all that, so let's see. So we have number one, we have what we call scalpers. Scalpers. Now, scalpers are those people who like who hold their trades for maybe few seconds or few minutes. These are scalpers. These are people that open trade and close it quickly. Open trade and close it quickly. These guys, they they can open like 50 trades in a day, 100 trades in a day. Okay, because they're only interested in tiny profit here and there, tiny profit here and there. I pick 5 pips here, I pick 10 pips here, 5 pips, 10 pips, 12 pips, 5 pips, 10 pips, 12 pips, and here and there, here and there, you know. So that's how they trade. So we call them scalpers. And then to be a scalper, one needs to have a scalping strategy. Okay, it's not just about you going right there and start, when you see a candle going up, you start buying and then you quickly close it. When you see a candle falling, you start selling and then quickly close. That's not scalping. Scalping comes with strategy. Okay, scalping comes with a strategy. So when you see that strategy, you trade, and then the essence of trading is that you just want to pick something tiny from it. And then, so these scalpers, they use the 1 minute, 5 minutes, and 15 minutes time frames. So when they are doing the analysis, they do the analysis from the 1 minute, 5 minutes. Okay, a lot of time from the 1 minute and 5 minutes. Why they use the 5 minutes for some other for analysis and all that, but they trade on the 1 minute and the 5 minutes time frame. Okay, because those are the short time frame. All right, they are the short time frame for scalpers. Okay, so that's it. And the second set of people, traders, are the people we call day traders. Okay, day traders, they hold their trades longer than scalpers. Okay, although they're also short-term traders, but they are not as short-term as scalpers. All right, so these ones, they hold trades for maybe few hours to a day or two. All right, just it for maybe a day, most of the time a day traders. All right, okay, there's a much of just a day. Although we have what we call intraday. Let's put it like intraday traders. Okay, intraday traders to a day or two. Now, in that intraday traders, those ones, they all trade for between few hours. I mean, they all trade within a day and close it on that day. They don't carry their trade to the other day, to the next day. Okay, they don't carry their trades to the next day. So when they open a trade today, they close it today. All right, intraday and day trading. But when you look at day traders, there are sometimes day traders can hold their trade maybe to the second day, but it doesn't really get more than 2 days. All right, so they're also short-term traders. So they use the 15 minutes, 30 minutes, and maybe 1 hour time frame, okay, for their analysis. So when you see somebody just looking at 15 minutes, 30 minutes, 1 hour alone, they are most probably intraday traders or maybe day traders. Okay, and then number 3, we have what we call the swing traders. So these ones too, they can hold trades within several hours. They can also open their trade today and close it today anyways, but or let's say, okay, let's just they can hold trades, let's just say for a few days, or even few weeks. Okay, these are traders that can hold their trade for, much longer than this ones. They can hold it for several days, for few days, several days, or even maybe few weeks. Okay, and they use the 4-hour, let me say H4, and daily time frame to do the analysis. Okay, and then we have the fourth people. We call them position traders. So these ones are long term. They can hold trades for several weeks or months. Can hold it for many months, maybe many weeks, maybe few months, or even for many months. So of course you can guess, what time frame do you think they use? They use the weekly and the monthly time frame majorly. Okay, maybe even the daily. Of course they can use the daily too. Okay, yes, they can use the daily also. The daily is like their smallest time frame. They can use the daily, weekly, and monthly time frame, okay, for their analysis. So these are the 4 types of traders that we have. Now, what makes someone to choose what kind of trader I want to be? Okay, what makes them to choose what kind of trader do? Number one is the time they have to trade. Time availability. That's the number one reason. Now, if I am somebody who has so much time, maybe I don't have any other thing I am doing. All right, I can be a scalper, I can be an intraday trader because I have so much time in my end, okay, to monitor. Because when you are a scalper, you have to stay there. You must not leave. Okay, you have to stay there because it's just for a few seconds or few minutes. Intraday, you also have to stay, but you can just drink water, maybe live there for maybe some minutes or maybe 1 hour, and then, but you have to just make sure that you are monitoring things. But if you're a swing trader, you might not even look it for a whole day. Okay, you are even not even check your trade for a whole day. If you're a position trader, in fact, don't have to bother yourself about the trades. It's long term. Okay. So for a swing trader can be looking at his charts, maybe like it can look at his charts or do his analysis maybe like 2 times in a day, maybe 30 minutes each of the day. That's it. So that allows them to do many other things. Position trader, those ones they can even do the analysis maybe once a day or 2 times or 3 times in a week. All right. So they have so much time to do other things. But intraday traders, they have to, they have to be there. Intraday, they have to be there. Scalpers, they have to be there as well. Okay, but the thing about scalper is that, once you're out of the trade, you're out of the trade. So you've already seen the results. But you see these other guys, they have to carry their trades over several days and several weeks. Okay, so that takes us to the second one. The second one is your emotional capacity and your ability to detach yourself, from this emotion, ability to detach yourself from emotion. If you are somebody that, you are really very emotional about money, okay, maybe swing trading might not be for you. After you have already allocated a risk to that trade, but your mind can still not go, you won't be able to sleep. So that means you should just be an intraday trader or a scalper. So you've already closed the trade, you've seen whatever you want to see, you've closed it. At least you've seen the result for the day, you can sleep, nothing is holding you. So the emotional capacity, is also there. Okay, it's also another reason why people choose. And then the other thing is personality. The personality of the trader is there as well. Okay, your personality, if you are somebody who is not really patient, it's not really that easy to change ourselves when we get to a certain age, right? You will agree with me. It's not really that easy to change ourselves when we get to a certain. So you know yourself, I know myself. All right. So make sure if you know that you cannot adjust yourself, then find a method that can adjust to you. or that can adjust for you. Okay, instead of you adjusting yourself for that method. All right. All right. So you can just make sure that you stay in your soft spot. If your personality is you are normally somebody who is not really that patient, all right, you can't really stay for long. Your mind will just be on the trades. So just find a scalping strategy or find an intraday strategy that you can use. Once the trade is done, is done. All right. So your personality is personality is really very, very important. Okay. So we have some traders that they are very, very swing traders. I have a friend who is a very magnificent swing trader. Okay, it's not just about the strategy, but his ability to stay calm for several days, for several weeks, for few weeks, to hold his trades. Despite all the up and down the market is going, it won't waver, it won't shake. All right, no matter what the market is doing, it will not shake. Okay, it doesn't stay glued to his result and start looking at all the plus and minus is seen on his on his account. Okay, it doesn't do that. Such a person can be a swing trader. Okay, but people who can't do that, it's either they just stay intraday, close their trade for the day, and then get out, and then just go. So these three things are really very important when it comes to you choosing how you want to trade. All right. So time availability, emotional capacity, and your personality. Okay. Very, very important. All right. And so that's going to be where I'm going to stop for today. Now, I want to take your questions. So I believe that a lot of you have questions that you want to ask. Okay. So please start dropping your question now. Let's look at questions maybe for the next 10 minutes, or else I'm going to stop this video so that it won't be too long for us. So it's not going to capture the questions. So thank you very much for joining. So let's go to the question and answer session.